Welcome to the Stocks with Josh show. What's going on in the markets? Well, it's been a big news day. We got the November jobs growth report, which we all know is Fed Powell's favorite indicator. The railroad strike was averted, keeping the supply chains moving. And then Coinbase and Apple, they're going to war. That Apple greed is still out of control. And the meme stocks are perhaps heating up again. AMC has unusual options activity. I'm going to cover all these topics, and I'm going to give you guys my first value stock pick from my top 10 stocks to buy during the 2023 recession. So go ahead, hit the like for me, check to see that you are subscribed, and join the Stocks with Josh Trade fam by hitting that notification bell. Okay, we got the jobs growth data report came in today, and it came in super strong. It was way higher than anybody expected. This is an inflation setback. It's telling us that the economy is doing way better than everybody keeps imagining. Well, this economy is great, man. It's a job-producing, salary-raising economy. The economy gave us 263,000 jobs, and that exceeded the economists' expectations of a mere 200,000, so way over. There was also an acceleration in pay gains. This is another big indicator that the Fed is keeping his eye on. People went from making around 3.9% more to 5.8% more. This is what the Fed is saying, that there's room for him to be hawkish, there's room for him to continue to raise the interest rates, and there's reason for him to hold those interest rates higher for a longer period of time because we've got an economy that's still on a heater, that's running strong and is not slowed down. All right, another really big news story today was that Joe Biden, he signed a bill into law making it illegal for the railroad workers to strike. If these guys had striked, it would have cost the U.S. economy $2 billion per day, disrupting the supply chain. And no, the Christmas presents would not have been coming across the railroad to your homes in December. But this brings up a very interesting question. Should the politicians make the railroad workers work, or should they be allowed to fight for their proper pay? I would love to hear from you guys in the comment section, but don't get overly political. It's not about slamming either party. There are good people on both sides of the party. We need to be united on this page, so keep it positive. And there's more drama in the news today with Apple. Apple continuously going to war with American companies. Coinbase and Apple are at it. Coinbase basically says that Apple has blocked its last app, the release on NFTs in Wallet. Now, Apple's claim is that the gas fees required to send NFTs need to go through their paid in-app purchase system because they want their 30% of all the gas fees. Now, Coinbase Wallet added in a tweet, they said that it would not be able to comply with the requirement even if it tried, as the iPhone's proprietary in-app purchase system does not support crypto. Apple shows up nowadays like a tax man. Tim Cook over there with his hand out saying, "Give me my slice of pie." Coinbase complained that this policy would be similar to Apple if they were trying to take a cut of the fees for every email that was sent through Google or Yahoo. And all of a sudden, I have to be honest, I was thinking of Solana and that Solana phone. It's not looking too bad today. But one step better than a Solana phone for me would be a Tesla Starlink phone. Now that would be a game changer. Now let me know if you guys would be a buyer. The 30% fee has been a big problem between Apple and a lot of other app developers and companies like Spotify and Fortnite, which is the maker Epic Games. These guys have been accusing Apple for a long time of being a tyrant monopoly. Now, if Apple can get back to $155, in my mind, I'm going to be laying on some puts because I'm bearish for Apple in the short term. Long term, I think that it's going to continue to be an outperforming dominant company, but I don't like it at its current price. I want to see it get back up to 155, and I would love to short it down to my ideal buy price. And then today, we had some very unusual options activity on the AMC stock. Our meme stocks coming back. Well, traders bought 338,000 call options. A call option means that you believe that the stock price is going up and it's going up quickly. That was a 21% increase in AMC call options. Now, I think that there could be a squeeze up to $12 or $13. And I'm going to say that if you guys are bag holding AMC, if you get between $12 and $13, sell, sell, sell. Because as I charted for you guys, the future price of AMC could easily hit $3. The reasons I gave before is that they have a crushing debt under a Fed who is continuously raising rates. They have poor financial management. It means how they spend their money and what they spend their money on. And they've got a lack of innovation in the movie theater experience. So keep your eye on AMC for a potential big move. All right, and now for what you guys have been waiting for and asking me a lot for in the comments section, my first value pick. This is my first value pick out of my top 10 stocks to invest in 2023 during the recession. And here's going to be the underlining question. Is it time to shift away from growth? Is big tech going to continue to lead the market higher in 2023? Or is it time to be skeptical of the growth story that has captivated so many investors? The growth story is fun, it's technology, it disrupted industries. But has that going to be weak in 2023 while the value story is going to have a strong year? Are the sexy New World Order stocks getting tired and old? Well, Apple is the new IBM, low innovation, focused on monopolizing their power. Facebook Meta in decline as TikTok and AI rises to power. Tesla has a ton of opportunity, but Elon is currently reinventing Twitter. If Tesla announced a Tesla phone and they showed me how they were going to come up with the money to do it, then I would be interested in the Tesla stock. If you want exposure to growth, you can always buy the QQQ because that's basically a group of tech stocks on steroids. That's the way to consider playing growth. All right, guys, first question. Who will have better earnings in 2023, value or growth? Let me know in the comments. I'm going to be buying growth, but only at the right price, whereas value may be ready sooner. I'm going to give you guys my first value stock pick. But first, I want you to take a look at the affiliate, the Moomoo investment app. Moomoo is a licensed, regulated, and insured zero commission trading platform for your phone, your iPad, and your computer. They offer the free level 2 data. They offer a stock screener to pick hot stocks daily. They've got the 8 order types like advanced stop losses. You guys need that to lock in profits as well as to protect your cash. Their exclusive limited time holiday offer is for 15 free stock for opening and funding an account right now. Plus, you get a chance at $60,000. And you guys can join the Stocks with Josh community page, as well as the Stock Josh Family daily chat group. Go ahead and click the link in the top pinned comment and start investing today. All right, let's get into it. My first recession stock value stock play is Bank of America. Now, some people got into banks too early. They got into them months ago, and these guys got burned. We have to be patient. Bank of America hit a 40% low from its all-time highs early October, and it's currently up 20% from those June and those October lows. That is showing really nice relative strength. But is it a buy right now? I'm going to say no. Patient hands, wait for the price to come to them, and that's what I'm going to do with Bank of America. The buy zone begins for me at $32, but I would be thrilled to get it at $32, and I believe that the risk below $32 would be fairly low. Basically, Bank of America is the second largest bank in the US. Their current price is $36.55. Bank of America shows a prevailing real value of $43.14 per share. Real value or relative value takes into consideration the EV, the revenue, the EV, the EBITDA, and the PE ratios. It has a DCF value of $60.56. That's discounted cash flow valuation. The projected value based on future cash flow adjusted for time and the value of money. Now, my future price prediction for Bank of America is $60, and that would be a solid 60% upside. Dozens of analysts covering Bank of America have a very similar projection that's quite conservative. All right, let's cover the bearish narrative of investing in bank stocks while going into a recession. A lot of people are going to say, Josh, these guys could be in trouble in 2023. They may not have covered their risk correctly. Now, the idea is that a recession could lead to higher credit defaults on credit cards, as well as your car loans in particular. Now, if you remember the review that I did on Goldman Sachs, that report that I shared with you guys yesterday, they believe that the US potentially has a much lower risk of going into a deep recession because of higher salaries. And if we take into account the jobs report data that we're getting, what did we just see? The pay gains were up already 3.9%, and then this last month they went up 5.8%. So people's pay is continuing to rise. And so maybe they can afford the car loan. Maybe they can afford to pay their credit cards and not go bankrupt. And I think that this could mean that more fear has been baked into the stock currently, and we could see very consistent upside earnings. Now, in quarter three, Bank of America actually showed 400,000 new consumers, new consumer checking accounts, as well as 1.3 million new credit cards. That was a 20% year-over-year increase. This is also consistent with the idea that people are not doing terribly bad financially. These guys are opening up new lines of credit, opening up new bank accounts. They're getting new jobs with higher pay. And 100,000 of those new consumer investment accounts went to retail investors. Another big indicator was that Millennial and Gen Z spending increased by around 40% in the third quarter, more than any other age group, which showed that Bank of America was successfully advertising to the next generation. Travel and entertainment spending increased by 57% over last year. Now, in a weird way, banks have been a post-COVID play, as people are still itching to travel and to spend money. Bank of America does pay a dividend. It's averaged slightly under 3% for the last 12 months. It is paid at the discretion of the company, but it has been fairly consistent. And if you guys owned 100 shares of Bank of America, you could sell covered calls, which is really the goal of a retirement account for me. It's to gain the premium to continue to grow the number of shares I own. Now, selling covered calls is a low-risk strategy for earning weekly or monthly income. I don't know if many of you guys have been exposed to it, so I'll just kind of touch on it briefly. What is a covered call? Well, a covered call is an option. It's when you sell someone else the right for them to purchase your shares. And they call it covered because you own the shares and you give it to them at a specific price of a strike price, which it may or may not hit. Remember, the guy who sells the options collects the premium. That's his. That goes into his pot. Now, this method to grow your retirement account can potentially add a minimum of 5% annually. There are some people that will even say it could go as low as 1%, but most people are able to manage 5%, as well as the fact that there are some experts that I have followed for years that are selling covered calls and puts very strategically and have actually made as much as 50% a year. So this is something to educate yourself on and begin to look at. All right, guys, that was the first stock pick that I'm sharing with you guys from my value portfolio. It's going to be also filled with dividends. It's going to be an account in which I'm going to be selling covered calls and puts. That's my big plan for 2023, and I'm going to continue to share these picks with you guys. The purpose is to stop the bleeding of risky investments for some and to put a plan in place that puts you on the path to what I would say is real wealth independence. I know that's the goal, but sometimes people find it very elusive as they begin to get into the investment game. If you liked it, then show the love by hitting the like. Check and see if you're subscribed. Feel free to join our family by hitting that bell. And keep the conversation going here in the comment section as well as over on the Moomoo app. As always, guys, peace and blessings. I look forward to talking to you in the next video. Take care.